Hi, everyone. Welcome back. So I hope everyone had a great Wednesday. Obviously, Jerome Powell spoke today. Markets were up prior to it. And then after he spoke, markets went crashing down. So we'll look at, obviously, the markets, Bitcoin, Ethereum, see what's going on there. We're also going to take a look at the miners. They were down for the most part as well. And then we'll take a look at Luxxfolio, Iris Energy. There's some bad news for both of those. Luxxfolio looks like it's in a better shape than Iris Energy. But obviously, they both have cash flow problems with the miners that they currently have. So are they selling, returning miners, facilities? What's going on there? We'll take a look at it. And then we got Marathon providing their hash rate increase for October, which is huge. So it exploded. October mining production update. We'll get into that as well. And that should be it for the day. So as always, not financial advice. You guys know the drill here. I'm investing in finding coins and companies. And if you enjoy this type of content, hit the like button, subscribe. Helps me out tremendously. And let's get into the market, Bitcoin, Ethereum, and everything else. So obviously the S&P was down today 2.5%. It was actually up on the day. It was up to a high of 38,000, not 38,000. It was 3,894. But then it came crashing down and closed at 3,759. Dow Jones, same thing. It was down 1.55% to 32,144. NASDAQ was down 3.39% to 10,906. You can see obviously this nice big fall here during the day after the Jerome Powell spoke. Bitcoin, similar situation. It was up today towards 20,805 at the high, low of 20,059, and then closed at 20,151. We are up a little bit on that right now. We're up 0.13% to 20,175 a little bit. The good news is on the daily chart, the RSI did come down to about 53. Last time we were right around here, which was on October 23rd. Price was at that point, it closed out at 19,547. So we are up close to 600 or so, $600 in price appreciation during that time. So that is obviously good there. So it's turning to be a little bit more bullish on the daily chart. 4-hour chart, we are way down here on the RSI, now at 36. Last time we were back here on Friday, the 21st of October. Price at that point was 18,949. So we are obviously way up from where we were back then. So that's still looking pretty bullish to me on the 4-hour chart. 1-hour chart, we obviously bottomed out here at 28 today. And if we scroll far enough back, see here if we're still higher than we were where we were back then, and that was close to Friday the 28th, and price at that point was actually right around 20,000 or so. So we are still above that. I mean, obviously we've come back up a little bit, so we'll see if we can stay above it. Right now the RSI is at 35. Last time was right around here, so we're actually lower on price on the 1-hour chart, so it might be turning a little bit bearish here. We'll have to see how that's going to play out. Ethereum was same thing, was down today, then it was up today, then down. So it closed out today at 1,518. It did have a high of 1,622 and a low of 1,502. So we'll keep an eye on that one as well. Let's take a look at the miners, see how they did. And they didn't do well today either. ANY was down 3.82% to 42 cents. Argo was actually up today 11.76% to 9 cents, 9.5 cents. Bit Digital was down 0.96 to $1.03. Bitfarms was down 5.94% to 89 cents. CleanSpark was down 8.28% to $2.99. Cores was down 6.19% to 16 cents. DigiHost was up 3.65 to 72 cents. DMG was down 4.4% to 17, almost 18 cents. Greenidge was down 7.74% to 82 cents. Hive was down 4.22% to $2.95. Hut 8 was down 3.67% to $2.10. Iris Energy was down 15.04% to $2.88. Obviously, the news that came out from them today wasn't taken well by investors, and neither was Luxxfolio's numbers. So Luxxfolio was down 82.64% today to 1 penny. That is a huge drop for them. Obviously, they were at right around 5 cents trading. Obviously, now they're a penny stock, possibly going to be going even lower than that. Marathon was down 10.68% today to $10.82, surprisingly, even that they provided really good numbers. Trying to figure out why investors would be down on it. Mawson was up 3.49% to 46 cents. Riot was down 8.99% to $5.87. Soluna was down 5.36% to $1.06. Stronghold was up 0.41% to 92 cents. So I think it's just basically because the market was down, everything was down on it. That's just the way it is, I guess. All right, let's take a look at the downward cash rate really quick while we're at it. And right now, whoa, I guess this is the energization of marathon miners popping in line here. So now we have reached a new all-time high of 273 million terahashes per second. Prior high was 266, and this is on the 7-day average. If we look at maybe just the 1-day average here, we can see that we peaked at, what did we peak at? 316 million. Wow, that is obviously a huge jump here from it. So we got obviously miners getting energized, it looks like. Okay, that's not going to bode well obviously for the miners. They're going to have less revenue. I'm sure we're going to get an increase in difficulty coming up here. So that's not good, especially such a big jump here. Okay, so that's where we are with hash rate, miners, markets, everything else, Bitcoin and Ethereum. Let's take a look at our first story here, which is on Luxxfolio. So this one's going to be pretty quick here. We'll try to get through this. So here's what Luxxfolio provided with us today. So to date, Luxxfolio has reduced its debt and moved to lower cost immersion mining, but remains unprofitable. This is actually surprising that they went to immersion cooling, which at that point you can obviously get a better hash rate from your miners. The only explanation they can come up with here is their electrical price. They didn't provide what that is, but I'm guessing it's got to be close to 9-10 cents if they're still unprofitable at that point, which is a shame, obviously. But it could mean that obviously somebody can, well, we'll get into it here. But following a detailed review of the current operations and market conditions, the company has decided to seek strategic alternatives for its 15 megawatt Bitcoin mining facility in New Mexico. In the absence of finding a partner or purchaser for the mining operation, the company will consider all options, including idling or permanently shut down the operations, which isn't good. They also had 2 people leave the board here. We had Kelly K. and David G. Resign from Luxxfolio's board effective November 1st. The company thanks them for their service. As a result, Luxxfolio's board presently consists of 2 directors. While reviewing strategic alternatives, the company intends to seek qualified candidates to appoint as additional board members. So there's that going on. Let's see here. What else? I think that's it. So obviously this 15 megawatt facility in New Mexico is up possibly for sale. Obviously they're looking for a partner or a purchaser for the mining operation. So don't know how much something like that is going to go for. I know CleanSpark paid close to 40 some odd million for, but that was a lot bigger facility than this. So I'm guessing this could probably sell for maybe, I have no idea, maybe 5 million or something like that, 5-7 million. And also depending on how many miners they have in there. And let's take a look at what that would actually represent. So 15 megawatts isn't too big. Actually, I had it over here. Sorry. Watts. Here we go. Sorry, I had to cough. So 15 megawatts. If we're putting in the new 140 terahash miners in there, you could get up to basically half an exahash, 0.51 exahash. Installed, you can install about, let me see here, 3,000, yeah, if we're looking at 3.3 kilowatts per miner, so it's 3,300 watts, roughly. I think the 140 terahash are right around there, so we're looking at about 3,636 miners getting installed in there. That would represent 5 exahash, or 0.5 exahash, half an exahash. So not a big facility, obviously. Don't know if there's any room for improvement at that facility, if you can add on more megawatts. If you can't, obviously it still would be something, and maybe one of the miners might pick it up, whether it's Hive, Hut 8, or CleanSpark. They've obviously been on a buying spree lately. So, I mean, I wouldn't be surprised if tomorrow we hear something that they're buying it, just as much as they've been buying lately. But yeah, that's obviously unfortunate for Luxxfolio there. Oop, went too far. So that is it on Luxxfolio. Obviously, they're in bad shape. It also depends on, like I said, the electrical costs that they have. If it's around 9 cents, 10 cents, can that be negotiated with the electrical company to get a better rate and locked in rate as well? That's obviously going to be the deciding factor there for anybody that's going to be purchasing that facility. Okay, next is Iris Energy. So financing and Bitmain prepayment update for Iris Energy. There's a lot to go over here. I had to read this over a couple of times just to kind of understand what's going on here. But we'll go through this relatively quickly, I hope. But we'll get into it here now. So the group has limited recourse equipment financing arrangements in wholly owned special purpose vehicles which have no parent company guarantee or recourse to any other group entities. There is no other debt in the group. So they created these kind of special purpose vehicles to take out loans against the miners, from what I understand. And correct me if I'm wrong on this. And they have no bearing on the overall company in total. So if those special purpose vehicles aren't able to pay for themselves, they can, I believe, and I think it's stated in there that basically they can default on these and it wouldn't affect the company or their data centers or anything else, that those lenders couldn't go after the company assets basically. So in a way, this is actually pretty good that they did this. The group has $53 million of cash in the bank as of October 31st. So they're talking about Iris Energy. These financing arrangements were initially structured for prudent risk management to protect the underlying business and data center infrastructure the group has built. So this is actually a good thing, like I said. Excuse me, I had a cough. Okay. Certain equipment, i.e. Bitcoin miners owned by the special purpose vehicles, currently produce insufficient cash flow to service their respective debt financing obligations and have a current market value well below the principal amount of the relevant loans. Restructuring discussions with the lender remain ongoing. So they're still trying to figure this out, how they can go about basically maybe extending the loan out longer, cutting the payments in half until, you know, it's more profitable to mine Bitcoin. Whatever those discussions might be, I have no idea. But obviously the insufficient cash flow to service them, and down below they get into actually the details of what that means. Now, the 2.4 exahash of miners and all of the group's data center capacity and deployment pipeline are unaffected by these financing arrangements. So this was a little confusing for me. And when you get down a little bit further, I'll explain why. The group is exploring opportunities to utilize data center capacity that may become available, recognizing current scarcity of industry hosting data center capacity, prospect of utilizing 75 million of prepayments already made to Bitmain in respect of additional 7.5 exahash of contracted miners for further self-mining. So they're still in talks with Bitmain on that. There is no final answer on it yet. Continuing on down here. So limited recourse equipment financing. The group has no debt other than the limited recourse equipment financing arrangements described below. So the company has 3 wholly owned special purpose vehicles referred to as SPV1, SPV2, and SPV3. Together, the SPVs. As at September 30th, 2022, the non-recourse SPVs had the following principal amounts outstanding under their respective limited recourse equipment financing facilities. So SPV1 had 1 million secured against 0.2 exahash of miners. SPV2 had 32 million secured against 1.6 exahash of miners. And SPV3 had 71 million secured against 2.0 exahash of miners. So it looks like based on this, it looks like they paid more on the SPV3, 71 million to 2 exahash compared to 32 million, which is half of that, and you have 1.6 exahash on that one. So the lender to each non-recourse SPV has no recourse to and no cross-collateralization with respect to assets of the company or any other group entity, including other non-recourse SPVs. So this is kind of good. They're kind of siloed in those SPV vehicles that they're talking about here. So they can't go after the company or anything like that. So this is actually pretty good. It's not that bad. But it does mean that they may have to give back some of the miners, I think, possibly, if they can't get this restructured in a way that's obviously beneficial to the company and to the lender. So the secured miners owned by each of the non-recourse SPV2 and SPV3 currently produce insufficient cash flow to reservice their respective debt financing obligations, and in aggregate are currently capable of generating an indicative 2 million of Bitcoin mining monthly gross profit. So this is after electricity is paid for, basically, I'm guessing, compared to aggregate required monthly principal and interest payment obligations of 7 million. So on the total of 100, what did they take out here? 104 million in, looks like, loans on these miners. They have to pay $7 million a month, basically, on that. And based on that, that would be, what, a year and a half repayment, 2 years repayment plan, I guess. If you're going at 7 million, that's 84 million a year, 168 million every 2 years. So that might be the case there. Have a market value which the company currently estimates to be approximately 65 to 70 million relative to aggregate 103 million principal amount of loans outstanding as of September 30th. So I think this is actually pretty high here. We've seen obviously miners being sold for $14.50 per terahash. That would be a little bit higher than well, I'm guessing it'd be closer probably to like 50 million possibly, not 65 to 70 million. That seems a little high there. The SPV2 and the SPV3 are engaged in discussions with their lender and reached an agreement for a 2-week deferral of scheduled principal payments originally due under both equipment financing arrangements on October 25th to November 8th. So that's obviously a week away. And they're trying to obviously get this worked out. Now, I think it gets down here a little bit. So unless a suitable agreement is reached with the lender on modified terms for both equipment financing arrangements, the group does not intend to provide further financial support to non-recourse SPV2 and non-recourse SPV3. So basically, if they can't reach an agreement, they're not going to provide any payment for it. So the group does not intend to provide further financial support. So meaning that the 53 million that they do have in cash right now, they're not intending to use that towards these vehicles, basically. The SPV2 and the SPV3. Okay. In this case, the company expects that neither of those SPVs will be able to make the scheduled principal payment on November 8th, which would result in default for those SPVs under their respective limited recourse equipment financing arrangements. So that would be a default. I guess they would have to give the miners back. But in total, excuse me, in total they have, here it is, 3.6, 3.8 exahash of miners, and they're saying that the 2.4 exahash miners are not affected, are unaffected by these financing arrangements, are unaffected. Yeah, so they're not affected by these financing arrangements, meaning that they would have to possibly give back, if it's about 1.4 exahash, it seems like, on it, which is kind of strange. I'm trying to figure this out. Let me see here. We went through this. We went through that. Okay, Bitmain prepayments. So the company is pleased to announce today that it has utilized an additional portion of its prepayments with Bitmain to purchase additional miners, further reducing unutilized prepayments made to Bitmain from 83 million to 75 million in respect of additional contracted miners. The company simultaneously sold the same purchase miners to a third party, resulting in net cash proceeds of 8.6 million, which have been received in full by the company. So they obviously sold some miners. The remaining 75 million of prepayments the company has made to Bitmain relate to an additional 7.5 exahash of S19J Pro miners, which is separate and incremental to the company's previous announced 6 exahash of capacity. So that would get them close to 13.5 exahash. Obviously, right now we are at 3.8 exahash. I'm not sure where the other, 3.8, the 2.4, that would get us close to the 6 exahash, I guess. So it's kind of confusing a little bit for me. Okay, so that was on the Bitmain miners, and down here we got some little nitty-gritty information that was way down here that you have to scroll all the way down. So number one, they are currently paying 6.5 cents per kilowatt hour on those special purpose vehicles, the SPVs, which are obviously at 3.8 exahash right now, which is kind of, if we look at the numbers that I have for them here, let's take a look at it. Iris Energy, I currently have them at 3.8 exahash roughly installed right now. They still have some miners, let me see, 17 exahash here, and then they're supposed to be coming in 2023, another to get us to 6. So those. So I wonder if those. So I'm trying to figure out which miners would be affected. Would it be the ones that are actually installed already? The 1.4 exahash are saying 2.4 is not going to be affected by it. So is it these over here? Let's see here. What do we got here? Those are 8. Those are the ones that they're still trying to figure out with Bitmain. So those are included in there. So it's got to be basically these couple last miners here that we have, which is 1.7 exahash. And yeah, I'm not sure how that's going to work out. They got currently 3.8. 3.8 represents the 3.8 that they have up there, but they're saying 2.4 is not going to get affected. So I'll have to figure that out somehow, get it worked out. Okay, but we know that they're at 6.5 cents per kilowatt right now. And if we look at the numbers here that I have for them, so we got it at 6.5 kilowatts. Let's see if I can zoom this in for you guys. Make it a little bit bigger. Network hash rate currently is 263 million terahashes. BTC price, well, when I did this was 20,500. Watts per miner was 3350. Electricity per miner is about $5.23. They are generating $1.79 per miner right now. That equates to 1.9 million, close to 2 million that they said on the miners. And if they got to pay the 7 million, that's obviously not going to cut it for them on that one. The only way they can obviously do this is just, this is my thinking, is what if they told the lender, extend the loan out another year or 2 years, cut the payments in half. So now you're only paying 3.5 million, you're bringing in 2 million. You only have to basically provide another 1.5 million to cover those costs from the 53 million that you have in cash right now. Is that a possibility? Is that something they can do? I don't know. It's a question for the management team there, see how they want to handle it. But that was kind of one of my thoughts that I had for this. The only way they could make enough 7 million currently is if Bitcoin was at 35,000 right now, for them to make 7 million to clear that. I don't see that happening anytime soon, maybe within the next 6 to 12 months, possibly. But it's obviously going to take a while for them to get to that point. And at that point, we've obviously seen the network hash rate already increase. So if network hash rate increases to 330 million by the time everything is said and done, well, now you're only making 4.6 million at 35,000. So you would almost need Bitcoin to be like, what, 45,000 to clear the 7? Yeah, you would need Bitcoin to be around 45,000 by that point to clear the 7 million that's needed to pay those miners off. Okay, that is that part of it. Okay, number 5. So such default would permit the lender to declare the entire 103 million aggregate principal amount of the relevant equipment financing facilities to be immediately due and payable by non-recourse SPV2 and SPV3. We expect that non-recourse SPV2 and SPV3 will not have sufficient funds to repay such equipment financing facilities, in which case such lender could enforce its security interest and foreclose on the Bitcoin miners owned by SPV2 and SPV3, respectively, which could result in the loss of such miners and materially reduce the company's operating capacity and could also lead to bankruptcy or liquidation of the relevant SPVs. So basically, SPV2 and SPV3 is basically 2.2 exahash and 1.6 exahash up here. So they're talking about 3.6 exahash, but here they're talking about 2.4 would be, okay, so that actually makes sense. If it's 3.6 here and the 2.4 over here, that would get us to the 6 exahash they're expecting to get to. So they could be down, obviously, to 2.4 exahash for the end of the year. Okay, that kind of makes more sense now that I'm working through this. So their goal is to obviously get to 6 exahash. If they lose these miners here, they're only getting to 2.4 exahash. Okay, that's kind of what we're basically getting at here with this. So the other option that they have really is to work out a deal where they can extend the loan out a little bit, cut the payments in half maybe, and then put in some of their own cash into it to get those miners paid off, maybe in a longer time frame. Or they could also, obviously, if Bitcoin starts going up, they're actually making more than 7 million. They can add on a percentage of that to pay it off faster or whatever it's going to be. But that is obviously something that is possible for them to do. But we'll see what they actually end up doing on this. Obviously, it would be a shame for them to foreclose on these miners and have them be out, especially since they're possibly already mining with them. But we'll see how this is going to play out. Obviously, it's not good. Okay, so that's Iris Energy, and I've been a little bit bullish on Iris Energy in the past. They've been doing really well as far as growing, but one of the things that I was waiting on was obviously this S19's getting worked out with Bitmain, the remainder to get them to possibly close to 13 now, 13 and a half. But now that they're going to be possibly losing miners as well, it makes it very hard for me to invest in them until we get it all figured out. So one of my goals was obviously once I dollar cost averages down low enough, Bitfarms and CleanSpark, below 20%, 10%, right around that range, I was going to start buying into Iris. Now I'm definitely not going to be doing that until we get some clarification on the special vehicle purposes miners and what's going to happen with the Bitmain deal there. If we get some clarification, then we'll see where things stand, and then I'll make my decision at that point. But right now, there's no way I'm investing in the company at this point, which is unfortunate. But it's a good thing I held off for so long and didn't actually bite the bullet. So as always, guys, do your own research, not financial advice. You got to do what you got to do. This is just what I'm doing, so do not follow me. Okay? All right. let's get into finally Marathon. Marathon had actually some really good news here for a change, which is really nice because they've been beaten down this year. They've had nothing but problems since the beginning of the year. So it's actually good to have some good news for Marathon. So here's the deal. So recent highlights produced a record 615 BTC in October of 2022, which is a huge increase from September. As of November 1st, operating mining fleet consisted of approximately 69,000 active miners, producing approximately 7 exahash after approximately 32 or 3.2 exahash were successfully energized during October of 2022. So this is a huge increase, obviously, for them. We've been waiting for this pretty much for the past 4 or 5 months or so. They've been working with Compute North. They said they had the miners in place. They just had to get energized. Compute North was saying that they needed to get some paperwork finished up with the regulatory authorities. And that actually finally happened. And now those are installed and running. So that's great. Total Bitcoin holdings increased to 11,285 BTC with a fair market value of approximately 231.3 million as of October 31st, which is great. Obviously, that's at the expense of shareholder dilution. Unrestricted Bitcoin holdings were approximately 3,464 BTC with a fair market value of approximately 71 million. So unrestricted Bitcoin holdings, I think that is, I don't think those are backed loans on that. I think it's just they have it in an investment vehicle, I believe. Correct me if I'm wrong on that. And then unrestricted cash on hand was approximately 52.1 million at October 31st, which is pretty good. We still obviously want to see how they paid down some of their debt. They have a lot of debt, but we'll take a look at that here shortly. Based on current construction and installation schedules provided to Marathon by its hosting providers, the company continues to expect to have enough miners installed to generate approximately 23 exahash near the middle of fiscal year of 2023. So we're at least another 8 months out before that happens, but that is actually pretty good news there. Once all the Marathon previously purchased miners are installed, approximately 66% of the company's hash rate is expected to be generated by S19 XPs. They have bought a lot of those. Those are obviously the 140 terahash miners, which are approximately 30% more efficient than prior generation. As a result, once fully operational, Marathon's Bitcoin mining operations are currently expected to be among the largest and most energy efficient on per terahash basis, which was obviously going to be true as well. So this is all good news there. And they are going to have their conference call on Tuesday, November 8th. So they're going to provide, obviously, their numbers for the quarter as well. And one of the things we're going to really look at, is going to be their numbers here. So if we look at our miner comparison, we look at Marathon. Where's Marathon? There it is. They have a lot of debt. Where is it? Total liabilities was 850 million here. Total current liabilities at the end of Q2 was 90 million. They did have 362 million in assets. And if you took all their current assets minus total liabilities, they were basically underwater by 487 million. So I want to see if this actually went down here, or if it actually went back up a little bit higher. But I would be surprised if it went up higher. I think this should go down a little bit. But we want to see how much it actually went down and how much they improved on their debt. But yeah, so that'll be interesting to find out. So we'll cover that on Tuesday when that happens. And let's take a look at the numbers that we have now for them. So here's what we got for them. Obviously, shares outstanding is 160 million. Stock price right now is $12.22. Market cap, and this was from yesterday, actually fell down today. So I need to update this price. Market cap is about 1.4 billion right now, which is the highest out of the miners that I cover. Current hash rate is about 7 exahash. Future hash rate is going to be 23 exahash. They are 30% operational. They still have 230% growth left in them. Hash rate average per miner is 100 terahash, which is great. BTC HODL is 11.285 thousand Bitcoin, valued at approximately 221 million right now. HODL to market cap percentage is 15.54%, and each share has $1.90 in HODL position right now. Production-wise, as you can see here, let me zoom this in for you guys as well. Let's see here. To make it a little bit easier, we can see their production for this year has been very, very wild. So they started out January with 462 BTC produced, then fell to 360 in February, went back up to March 436. April was down to 299. May they were down to 267. June they were down to 140. July down to 72. August they started going back up to 184. September 360, and now 615. So there's a nice increase there, obviously, which generated them approximately 12 million in revenue on that. Efficiency-wise, 87 basically Bitcoins per exahash. And they obviously don't sell anything. They HODL. So we don't have to worry about that. The miners that we did get installed here are these miners. Where are they? 30,000, right? 30,000 of these. And they are running basically for 13 and a half days in the month of October. The other miners that we had obviously were there for 31 days, and that got us to the 12 million or so in revenue here as well. Now, the only thing that they have left here looks like is another, we also installed these 3,100 terahash miners as well in here. So we still have 10,204 roughly of miners, of the 100 terahash miners to be installed. And then after that, we're on to the 140 terahash miners, which is going to account for approximately 108,000 of those. Of those miners, which is also going to get them to another 15 exahash on top of that. So that's a lot. Is that right? 15 exahash? Yeah, 15.12 exahash in addition to what they currently have. Now they're saying that this is obviously going to take some time. It's going to take throughout basically the better part of the first half of next year to get all these installed. So we'll keep an eye on it, see how that's going. But obviously this is going to help them generate more revenue here. So October we have them at 12 million. November we have them about 14.4. And then possibly 14.9 in December if Bitcoin price stays where it's at. Obviously hash rate has increased now. So that's going to have an impact on November numbers here a little bit, and along with December numbers. So we'll see if Bitcoin can follow along with the network hash rate. So those are the miners that got installed. As far as institutions did go down a little bit to 305 from 307. The only good thing is shares increased to 47,630,000 from 47,020,000. And percentage owned increased a little bit as well to 40.77. We still have the same analyst recommendations on the buy, hold, and on strong buy and hold. So we got 2, 4, and 3, and price targets is 35 for the high, 1873 for the average. So that went down a little bit, and the low went down to $8 right now. Now, based on all that numbers, let's go take a look at it over here. We do have it generating revenue of 136.9 million, and that's actual. That's what's reported for the last 3 quarters, which is Q2, Q1, and Q4 of 2021, which is down here, which is what we're tracking. And then we're adding the Q3 numbers into this current quarter for a total of 149 million right now. And if we're using 50% net income from gross revenue with a PE of 20, that should be about $12.77. That's kind of where they are right now. They're under it a little bit. They're $11 and something right now. So they're right where I think they should be based on this. And if you go to 75% net income from gross revenue, PE of 20, they're looking at $19.15. Obviously, once we add in this quarter here in Q4 and take out Q4 from last year, the numbers are going to go down a little bit because we're going on the previous 4 quarters. But the good thing is that they are going to be generating more going forward. So if we're looking PE, they could be obviously higher than where they are currently. And they have been as high as like 40 PE last bull run. If that's the case, that would get us to between 24.90 and 37.35, which is kind of in line with what the analysts are saying on them at $35 for the high. So that's kind of what we're looking at right now. It could obviously be a lot better depending on where Bitcoin goes. If Bitcoin goes up way, way higher, above 100,000 or something like that, then obviously I could see Marathon being maybe even closer to $50, $60, $70 per share if that happens, once we start on the next bull run. But I think we're still quite a ways out from that, at least a year, if not a little bit more, from a nice bull run happening before the next halving event. So that is it. Obviously, finally, Marathon is able to get things right and get things going for them. They've obviously had a hard time here in the past 5-6 months, and I've been giving him hell for it. But finally, they're actually performing like they should be. So great job by Marathon getting this stuff done. Hopefully the trouble with Compute North going bankruptcy and everything else does not have a material impact on them in the long run. So far, it doesn't seem like it is, so that's good. But only time will tell. So that's it. I hope you guys enjoyed it. If you did, hit the like button, subscribe. Helps me out tremendously. Comment down below what you guys thought of all the stories. Also, Spreadsheet is always available to my Patreon members. Thank you to everyone there for their continued support. And that's it. We'll see what else we get this week. We got a couple more miners that I think are going to be reporting their operation updates for October, which is going to be fun to look at. And hopefully we don't get any more bad news from miners, not being cash flow positive. But that's it. Thank you all so much for watching. Love you all. Have a great night. I'll see you guys in the next one. Bye.